Hey there, Lincoln here from bullacademy.org. Today, let's talk about the many ways you can lose money investing in the stock market. So, taking action can be very scary, especially if you don't know how that action can go wrong. I attribute that to the fact that people think that investing in the stock market is riskier than it actually is. Investing in the stock market really isn't that risky if you take the right approach and understand what not to do. But people try to make it seem that it's more risky than not investing at all. Some people want you to think that if you try to invest your own money in the stock market, you're going to lose your money. But in fact, it's riskier to not invest than it is to invest. Because if you don't invest, you are most definitely going to lose money to inflation at a rate of 2% per year. That means that every year, your money that's not invested, that's just sitting in your pocket or your bank account, is losing 2% in value every single year. Not investing also means that you're likely not going to accrue enough wealth to afford retirement. That means that you won't be able to ever retire if you don't invest and your money does not grow otherwise. That means that you could live your whole life having to work Monday through Friday from 9 to 5 just because you think it's too risky to invest your money. Not ever being able to retire sounds a whole lot riskier to me than potentially losing a couple percent of my money in the short term investing in the stock market. So now that you know the risk of not investing, let's discuss the ways that you can lose money if you choose to invest in the stock market. I've compiled nearly 30 ways that you can lose money investing in the stock market, especially if you take the wrong approach. But before we get to those, I want to ask you to like this video below, subscribe to the channel, hit the notification bell, and leave a comment below on what your thoughts are about how to lose money on the stock market. And if you want to help the channel grow, then join our Patreon community at patreon.bullacademy.org for just $12 a month, and you'll get more access to me to get direct answers to your investing questions. And you will have more frequent access to my portfolio updates and the stocks and SPACs that I'm watching before anybody else does. Your engagement really helps the channel grow, so thank you, and let's jump in. These are the ways you can lose money investing in the stock market. I'm going to run through these in list style. That means I'm not going to expand on each one, but I will touch on a few of them more deeply if it makes sense to. And if you want me to expand on any of these, leave a comment below and let me know which one you're interested in. So let's get started. You can lose money investing in the stock market by investing in companies you don't know, investing in companies you don't understand, investing in companies you don't believe in, investing in companies you don't plan to hold for the long term. So if you've been watching this channel, you know that those were the antithesis of the bull mentality. The bull mentality is that we know what we invest in. We understand what we invest in. We believe in what we invest in, and we hold for the long term because that's how we build wealth in this country. That's how we give ourselves the best chance at success on the stock market. So not practicing the bull mentality is definitely going to increase your chances of losing money while investing in the stock market. So now that we have the bull mentality out of the way, let's get to the rest of the ways that you can lose money investing in the stock market. Invest in money that you have a high chance of needing in the short term. That's 3 to 6 months or even 12 months in the future. Not having an emergency fund that can completely cover your monthly expenses for the next 3 to 8 months. That's because you'll be tempted to sell your stocks at a loss if you have an emergency that your emergency fund should have been prepared to cover, but it's not. Buying or selling with the wrong or inadequate information. Selling your stocks when they are down without first gathering the necessary recent information. Investing in bankrupt companies. That's because in bankruptcies, common stockholders usually don't get anything out of the liquidation. That means that your stock will likely go to zero when a company goes through a bankruptcy process. Investing in a dying company. Investing in a dying industry. Take legacy cars, for example. Day trading, which is speculating and not investing, so this is a game you likely don't have a chance at winning. Gambling with stock options, especially short-term stock options. A study of the Chicago Mercantile Exchange data shows that 3 out of every 4 stock options contracts sold over a 3-year period expired worthless. That's a 75% failure rate. If you're gambling with stock options, those are your chances at success, which is more likely at failure. Speculating on penny stocks, the chances of these stocks going up is very low, and the chances of these stocks going down is very high. So the odds are not in your favor if you're trying to get rich quick investing in penny stocks. Shorting stocks, just ask the Tesla shorts. Sure, a stock could go to zero if it loses 100% of its value, but the chances of that happening is pretty low. And in the slim chance that you do succeed and the stock goes to zero, your gains are capped at 100%. On the other hand, you have to consider that a stock price can go up infinitely, right? There's no upper bound to how high a stock price can go. It's market supply and demand. When you short a stock, the higher the price of the stock goes, the more money you could potentially lose. All of that means that your potential losses are unbounded. You could lose an unbounded amount of money by trying to short a stock. Using leverage by investing on margin that you cannot afford to pay back if things go wrong. And things will definitely go wrong. They always do. Investing in warrants without understanding the risk, such as the expiration date or any call provisions. Investing in warrants and letting them expire because you cannot afford to exercise them or you cannot sell them to somebody else. Buying a stock on its way up based on hype because you have FOMO, the fear of missing out. You will lose money when the hype eventually dies down, and it always does, and you sell for a loss or the stock price never recovers to above the price in which you bought at. Selling your stocks solely because other people are selling their stocks. Remember, Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. Selling just because others are selling and buying just because others are buying can lead to you losing your money because you're acting on emotions and on hype rather than on the data. If there is a catastrophic event that impacts your industry and causes stock prices to fall for a period longer than you can afford to wait for a rebound, a recession occurs causing your stock prices to fall and you sell them out of short-term need or out of fear, not earning enough returns from your investment to outpace inflation. Inflation is about 2% per year, so if you don't earn returns at least at 2%, then you're losing money. Paying more in fees to fund managers than they return to your portfolio. Freak accidents that negatively impact the companies you've invested in, either directly or indirectly, and you're not able to wait long enough for the company's stocks to recover to their original price. Not knowing when to let go of a stock. Bad things will happen. There will be negative headlines. Most of them will be insignificant, but some of them, a few of them, will be consequential. You need to know your own limits and your own goals so that you can take the time to assess any new information that is presented to you about the companies that you're investing in. If you don't take the time to assess new negative information fully, it can cause you to hold on to a stock that is going down. If the new information that you receive is drastically unfavorable to your company, you must decide if you can withstand any downturns that can result from the news. If you don't think that you can hold on through the downturn and get out on the other side if or when the company recovers from the downturn, then it might make sense for you to sell your stock and not hold on through this downturn because things can get worse before they get better. Lastly, and what has been the theme of most of these points, is not having a long enough time horizon for your investments to weather any short-term downturns in the market. Not having a long enough time horizon, not investing for the long term, can cause you to sell your stocks for a loss when the market goes down, when your stocks go down. When bad news happen and you haven't planned for the long term, you might be forced to sell your stocks for a loss, and that will lose you money. That is the moral of all of these points. So with all of that said, it's important to remind you that the best investment strategy that has been tried and true over and over again is just to buy and hold. And you can do that by practicing the bull mentality, which we preach on this channel. So now that you know the ways you can lose money investing in the stock market, I hope that this shows you that investing in the stock market is not as risky as people say. And if you want to continue to learn how to invest the right way, to build your wealth for the long term, to build wealth that will enable you to retire when you want to, then subscribe to the Bull Academy here on YouTube. We cover investing topics, we break it down so that you can understand in simplest terms so that you can get started investing. And you can learn how to build your wealth for the long term and not fall for the scammers who want to teach you their 10 tricks on how to get rich quick on day trading or swing trading. On this channel, we practice the bull mentality. We teach you everything you need to know to get started. So if you enjoyed this video, like the video below, subscribe to the channel, hit the notification bell, and comment below what your thoughts are on all of this, on the ways you can lose money and what your strategy is for making sure you don't lose your money and for building your wealth for the long term. And if you want to help the channel grow, remember to join our Patreon community at patreon.bullacademy.org. You'll be able to get more access to me and get direct answers to your investing questions. And you'll have a chance at winning $200 every month just for being a loyal and engaged patron. And of course, you will get frequent access to my portfolio updates and the stocks and SPACs that I'm following. And you'll be able to engage with the rest of the community members. And of course, you will get merch such as stickers and mugs and maybe t-shirts in the future. So I hope to see you over in the community at patreon.bullacademy.org. I'm Lincoln with bullacademy.org. Thank you again and have a great day.